Thanks for joining us today. My name's James Brown, Portfolio Manager in Barwon's private equity business. Today I'm joined by Bob Liu, Portfolio Manager of the Barwon Global Listed Private Equity Fund, to provide a quarterly update on the fund. Bob, thanks for joining us.
Good to be here.
So Bob, as we film this, we're approaching the end of the third quarter. For the calendar year to date, the Barwon Global Listed Private Equity Fund is up close to 20% and up close to 5% for the quarter. What do you put that performance down to?
There have been a couple of key contributors to fund performance to date. Overall, I think market sentiment has certainly improved since the start of the year, which has helped broader risk assets. But specifically to our fund, perhaps the largest contributor to the fund returns have been from the alternative asset managers. Over the last quarter, one notable development has been Blackstone finally being added to the S&P 500 index. Although speculated for some time since the S&P 500 rule change last year, the announcement itself was certainly well received by the market. The S&P 500 is one of the most tracked indices and equity indices in the world, both from passive ETFs. There's an estimated $6.5 trillion in AUM which tracks that, and a lot of active AUM, several trillion, which is benchmarked to the S&P 500. So overall, estimates for demand simply from the inclusion to the index, estimates for demand for Blackstone shares range anywhere between 15 to 20% of the free float. So we expect plenty of demand to come forth simply through that inclusion.
Great, so Blackstone, the first stock in the portfolio to go into the S&P 500. What's the read across to other candidates?
The next two off the rank, probably neck and neck at this point, KKR and Apollo. But certainly it's got positive implications for the broader sector. It's a big milestone for not only Blackstone, but the alternative asset management sector, which compared to many other industries is recent in its growth and scale. And certainly gives it a lot of validity across the investment landscape.
So Bob, thinking more broadly about the listed private equity sector, this time last year, the listed private equity sector was trading on an average discount of circa 40%. Now, we were talking a lot to clients about the opportunity, encouraging clients to look at the opportunity at that point. Now, one question we've started to get recently is with the fund up 20% year to date is, have prospective investors missed the boat? Now, interested in your perspectives on that question.
Last year, I felt like I sounded like a broken record. I certainly felt very strongly that markets were pricing in a lot of bad news. With the fund up 20% calendar year to date, the markets are pricing in less bad news. But if we map back to fundamentals, which is certainly our core focus, if we touch on discounts, firstly, discounts have come in, as you say, James, from 40 to 30%, but 30% is still double the long-term 10-year average of the sector. The other positive development that's driven the re-rating has been positive NAV growth. We've had 3 consecutive quarters of positive private equity net asset value growth. If markets finish where they are today for the third quarter, we might see a 4th consecutive quarter, and that has really provided support for markets and valuation across listed private equity.
Great. Now, another key driver for private equity is the M&A market and the IPO window. M&A has been very quiet over the last 12 months, but we've just started to see green shoots again with a number of IPOs. What does this mean for private equity in general?
In the near term, I think as M&A markets pick up, you get more portfolio turnover. That is clearly beneficial for 2 reasons. One being the validation of that net asset value or that private valuation. Certainly since the start of 2022, there have been questions raised over the marks of private equity assets. And being able to transact or sell an asset at a valuation certainly provides a lot more confidence and is the ultimate proof in the pudding. Secondly, it locks a lot of value within private equity portfolios as well. Private equity returns tend to be back-ended because when a sponsor first buys a company, they may make investments and changes to the business, and it's not until the 3rd, 4th, 5th year of ownership towards the back end are these returns, do you get a return on that investment? And indeed, when you finally sell an asset, that's when the true value creation becomes unlocked.
Brilliant. And just wrapping up, broad outlook for private equity from here.
I think today, underlying businesses are performing better than we had expected at the start of the year. While there are signs of deceleration in growth, I think that growth has certainly been much more resilient over the past 9 months. Moreover, if markets, as I was saying, if markets end where they are today, we're likely to see another quarter, a fourth consecutive quarter of private equity net asset value growth to 30 September, which provides valuation support on the back of growing earnings. And so for the remainder of the year and certainly into the start of next year, I think the sector is well positioned from both a fundamental and a valuation perspective.
Thanks, Bob, and thanks for joining us today. So if you have any questions or for further information, please get in contact with me or Bob or another member of the Barwon Investment Partners team.